let's look at the stock market. Question is the stock market, which has been moving down, was that setting up a top or just another move to all-time highs? Well, we're going to know that pretty soon. The stock market has not been able to hold gains. Now, right now, the S&P 500 is up about 0.5%, 26 points. It's had some 30-point gains and ended up on the downside. So we don't know whether the bottom is in, and based on the counts that I'm looking at, the odds are not good that the cycle's in. It's a little bit short right now, and I'll show you that. Also, I'll show you the MCI, the market condition indicator, which gives you a sense how to compare the strength and weakness in the different indicators. So a very important couple of weeks coming up. Let's take a look at the S&P 500, SPX, and here is the weekly pattern. Now, there is an alternative cycle on the bottom right in here, which shifts it over to the left. The reason that is in there is because the length of the cycle from the lows right over here is so long that it doesn't really make sense here at the 27th week and only just over 2% down that this is any kind of an intermediate decline. That all of that got kind of skewed during this period while many other sectors of the market were correcting steeply. The indexes just could not. So if you're looking at the minor cycle right there and the shifted one, that's what we're showing right over here, which still would not, if it followed this pattern, would not preclude getting up to another all-time high in October. So it would be a decline right over here into early October, a rally into around November 1st, and then the risks picking up again right over there. This whole idea of the projected minimum decline and then the revisions, it's now time to remove that. Clearly, that isn't how it resolved itself, and the shifted pattern in here makes a lot more sense to me. Let's take a look at the daily chart right here, which is where the major focus is, because that's going to give us the information that we need. The cycle rhythms in here have averaged on the ideal at around 20 to 21 weeks. We have that the cycles on the bottom, the dominant at 20 weeks. The minor cycle, which isn't always clear right now and didn't show up at all in this last cycle, is at about half that, at about 10 weeks. So it shows up sometimes, and other times it becomes invisible because it becomes skewed by the upward pressure. So momentum conditions have remained strong for the entire period in here for weeks and weeks until now. They finally went neutral, and you go back over here and you see where it went neutral back over here. There's no negative momentum in here at all, and then it turned positive again, and the magnitude of that advance was strong. So that's where you continue to get a sense of this upward movement. Now, note it came down here into support during this corrective phase, and now you have an update. It's not enough. I put in this is the beginning of building the complex structure in here, and I'm not going to complete it until I have the confirmed anchor point. I don't have that right now just because you have an update right now. And very easily this update could give some of it back, all of it back, or tomorrow could reverse the whole thing to the downside. So it's the low right over here, which was on Tuesday, was the 18th day. We could get an 18th day low. It's not ridiculous. It's not that far off. And if that's the case, well, you would begin to move to the upside. What we want to measure is first of all, when the low comes in, does it break this key level here at the 78.6, which is 44.05? Well, you see it didn't really get close to that. So there's no reason yet to believe that anything has changed other than the neutralizing of momentum right over here. So if this stabilizes in here in these next few days and then begins to move up, and the shape of the pattern is clear that we're in the next rising phase, then you will have had a nice bullishly configured cycle again, and the probabilities of getting to a new high are pretty good. If this gives it up and falls and maybe gets down to that level of 44.05 in the next few days, which is not ridiculous, then we would be less likely to go to an all-time high. So that's very important, 44.05. If it breaks 43.67, it will mean that the intermediate pattern has, the likelihood of a top has increased better than 70%. Right now we don't have that, but we're watching for that possibility, because just this one update a day does not make a bottom. We need to see it be able to follow through and give us that important shape, and the momentum go back to positive. Momentum here in the weekly, still positive, very clear when you look at that. So that's a look at the S&P 500, still in this upward trend, still bullishly configured, still giving you translations that are, well, this one was still on the right side, so not bad, and we'll just have to see if this rally holds, which I think it's a better probability it won't, and it will fall for a couple of days after this. We had anticipated in market week that it would make its low somewhere between Wednesday and Friday, and I still think that's the case, this being Wednesday, and there's a possibility it comes down into Friday. So has the bottom occurred yet? Well, I don't really know, but what I do know is that it will tell us, and this at this point it's just a bit early to be getting that kind of information. Here you can see the same thing. You have an extremely strong pattern in here where all of these declining phases, all of these declining cycles and nesting right in here brought you nothing but this sideways action, and then getting up through these resistances. The next level up over here is at about over 1600. That is a pretty good likelihood that we're going to take out that high over 1600, and this is the strongest of the indexes, and I will show you that when I put up the market condition indicator. Here you could see, while you got a neutral reading in the slim ribbon for the S&P 500, you actually have a buy warning right over here. This is a positive signal of resumption of upward momentum. Now, I want you to note that the slim ribbon is getting close right over here. This is going to need to get up over here to be able to hold that. So I'd like to see this actually be able to strengthen here in these next few days, and then get the good anchor point and build this next structure, which will be pointing to over 1600 on the upside. So you can see, looking at this, the Nasdaq is stronger than the S&P 500, and likely a bottom is either here or will occur sometime between Thursday and Friday. The next one we'll look at is the Russell. And here's your Russell right over here. The cycles in here are really looking pretty clear. You can see that. There's a question of whether this was the low or this was the low, but this really looks like it based on everything we saw. These cycles in here really need to be shortened in order for us to make sense out of that, because this bottom came earlier, and I'm reluctant to do that because this secondary low is almost right on, and these actually could be placed perfectly for coming cycles. So I might put a little smaller one in there to look at, but it's not that much different. Anyway, you can see clearly we're in a rising phase. The question to me is, will this rising phase go to a new high, or is this going to actually translate into some way that it can't make a new high and then roll over? These resistance areas are holding it right now. The configuration in here is sideways. It's not really positive. It would mean that these peaks in here are important peaks, and it may not be able to get up through that level. We just don't know yet, though the window of opportunity is to the upside when we look at that. And that's really key. Where is the window of opportunity when you look at these patterns? When you look here, you could see very similarly there's a bottoming period right in here. So Matt and I were discussing, what makes the bottoming period. And he's trying to define that in a way that's understandable, a little more understandable. And I think that he's got some good ways to describe that that's going to be brought to our level 3-4 members pretty soon. So this is actually level 2 members also. This is the a period where we expect that it would bottom in here and then begin to move up. This original upside projection right there, of course, nowhere near that. And these highs up over here in this 2350 area is the question, can it get up there? I think we're going to know that in this next cycle, where it has the window of opportunity to be moving up again in a strong way. Well, is it able to? Will it roll over and then begin to break key levels? Again, this is a little bit stronger than the S&P 500 when you look at this chart, but when you look at the momentum conditions, it's pretty much the same as the S&P 500. And I'm going to show you the market condition indicator, which is giving us a sense that it may actually be one of the weakest. Here is the market condition indicator. For those of you that are new to this indicator, it's the first one of our proprietary indicators that I developed. It was developed because when we do cycle analysis, we give momentum and strength and weakness conditions weightings that are higher for the longer term. This uses 4 different time frames and weights the longer term time frames as bigger. That means that shorter term moves won't affect this that much, and if it begins to affect the intermediate and longer term, then you will get crossovers through the swing zone. This is the swing zone between 25 and minus 25. So you can see in here the S&P 500 coming down and soon to test the swing zone. The Nasdaq way above the swing zone over here. So if you were looking to be a pair trader and saying, well, do I want to be short or long the Nasdaq versus the S&P 500? Well, this is a good way for you to do that. Also, we break it down further on the 15-minute charts in the stock index report live stream in our chart stream section, so you can use these multiple time frames to give you an idea about that. But clearly, when you see this not coming down as far as this, what it says is that the longer term conditions in here are stronger than they are here in the S&P 500. Which, and I showed you the analysis in the charts, the probabilities are higher of the Nasdaq making an all-time high than they are of the S&P 500. The Russell crosses through the swing zone, and this is a negative condition. This says that, when you look at the weekly and daily and weekly and monthly charts, how those variables are affecting this, says that those further out conditions are weaker, and that allows the short-term decline to break it through the swing zone, and that tells you that overall the Russell should be expected to, in the intermediate term, underperform. And for the short term, it gives you this warning. You're about to get the same warning in the Dow Jones right over here. So when you look at this, you could see Russell the weakest based on the sum of the conditions of all of the time frames. The Dow Jones is the next weakest. The S&P 500 is somewhat more firm, and the Nasdaq is clearly the strongest of all when you look at that. So I think it's really important. For those of you that are not a level 4 member and don't have Thinkorswim, this is just a great reason to do that with our other proprietary indicators that we offer to be able to have these on your chart. So I thought that was important information to share as we look at the stock market. Here again is the Russell and this decline right over here, and just speaking to what the information was that you were given based on the MCI, the directional conditions and the momentum conditions that existed that made this a flat cycle versus the rising ones that we saw in the other indexes that is still in existence. Those conditions are still in existence. And when I look at that, it says to me, that's why I have some question whether the Russell can actually make it to a new high in here. Or maybe it just doesn't test those levels and then begins to turn over again. So that's an expanded look at the stock market, and I hope you found that to be incredibly valuable. This is our level 4 special trial. This is for first-time subscribers and upgrades. What level 4 gets, and this is really an advanced level, is our annotated charts. That's our entire focused list live on your Thinkorswim platform. If you are not a Thinkorswim member, you can go to our site and you can open an account there, and then that would be great because we get credit for that. So Thinkorswim, TD Ameritrade is our preferred broker, and we'd love you to open up an account there to get our annotated charts. This is all of our analysis. On top of that, you get our proprietary studies, our option bias indicator, the market condition indicator, and you're going to get the grids that we have with 4 different time frames with our indicators on there. It's just incredible. You will also get the archive with all of our grids, with our trade ideas that include the slim ribbon PO, the reversal scout. Nobody else has these. These are our proprietary indicators that keep you on the right side of the market and give you an understanding of the market that it's really hard to get with any other combination of studies. You will love this. You'll get our free live events, webinars, trade planning services, best practices for utilizing AskSlim custom charts and studies. And you'll get our full membership access to everything in level 3, 2, and 1. There is too much for me to tell you about. There, you can go to the website and see everything that is included. This is a special 3-month trial. Level 4, 35% off for quarterly. That are normally we're at $159 a month, but you can have it for $101.25 a month for signing up for 3 months for level 4. All of this, these live charts, absolutely great. And there is one more thing that's really important. Our level 4 plus is a little bit different. This is, again, for first-time subs and upgrades, and we only have 10 spots available. Last time we did this, you have to get on a waiting list, and we had a huge waiting list, and we filled up in a couple of days. So we now have gotten better at it. We have these spots that have opened up, and we are going to take 10 more people. So what you get are custom chart requests. Everything that we showed you in level 4, you get, but you'll be able to ask us for our cycle analysis on any 2 symbols per week of your choice. You'll get the AskSlim daily and weekly charts to open up on your Thinkorswim platform, and you'll be able to see these specific symbols that you have interested in that we have provided to you that has our cycle analysis, timing, key levels, projections, all of that. And you get access to the full archive of all the requests of all of the level 4 plus members. So we get tons of those every day, and we post them and we share that analysis. It is one of the greatest resources of analysis that you will ever see. There's like 5 or 10 new ones up there a day. It's just crazy how much information this is. And you get our exclusive trader support from the AskSlim analytical team. That's Matt, Harvey, and I. We have, I have 47 years of experience in this. These other 2 guys are incredibly skilled. You can ask general questions around trading issues, trade planning, and chart analysis. And you get the full access to everything in level 4, 3, 2, and 1. This is normally $239 a month because you're getting our one-on-one help, and that's why we have to limit it to the number of people that we take, and we only have these 10 spots available now. So that the special price on that now is $465. That's only $155 a month. Imagine paying an analyst, somebody who you had that type of access to. With our experience, you could never get it for this price. So it's you can only use this special one time. $465 for 3 months, $155 a month is what that comes out to. You must reserve your spot because it's going to be first come, first serve, and I'm telling you it's going to fill up quickly. So write to matt@askslim.com. If you're not a TOS user, you don't have a TDA Ameritrade account, then please do open one up through our site. Just a little example right over here. This is what a custom chart looks like. Somebody requested that, so this just recently got posted up on our site for the level 4+ members. This is on target. You get the weekly analysis, and you can see the dominant cycle, the minor cycles, the important support areas. We talk about the configuration of the cycles, projections, the momentum indicator that's in there, and you can see in here in target, this is pointing to a correction coming in the next month. But this is a bullish pattern and then likely moving up again. Here you could see on the minor cycle on the daily, momentum has turned negative. The slim ribbon PO giving negative signals. So negative momentum here, likely decline over here in target. And this point shows you where the next date is, where there's an alignment between the daily chart and the weekly chart. Nested area right over there. This goes out here another 3-4 weeks. And that will likely be a point where you could start looking at the support zone and where to buy it. This is a just unbelievably great way for you to get a feel for stocks that you probably will have never had before, and ETFs and futures. We do it all. We look at 24 plus different futures contracts and market indexes, plus well over 400 stocks. Plus we'll bring in anyone that you ask us for that we can do this kind of analysis. So this is that great example of that. Please do go to AskSlim.com, get yourself on this waiting list, reserve your spot for this level 4 or level 4+, or you could just sign up for level 4 right now. And you won't have the one-on-one custom support from the team, but you'll get everything else also. And again, there's great charts that you see right over there.